However, if we were to look at incremental growth, that is, if we were to look at the growth in the loan book and split that growth between individuals and non-individuals, then in the 9-month period, 80% of the growth has been on individual loans and 20% has been on non-individual loans. However, if we were to look at this number only with reference to the third quarter, which is October to December 2020, then as much as 137% of the growth in the loan book during the quarter came on individual loans, and non-individual loans was actually a negative 37%. As we've discussed before also, we continue to hold all our investments in HDFC Bank, HDFC Life, HDFC Asset Management, and all our subsidiary and associate companies at their historical cost. That is at the price that we had paid whilst making those investments. If we were to mark-to-market these investments as of 31st of December, the unrealized gain, the difference between the market price on 31st December and the carrying cost would have been 2,52,910 crores of rupees. So we carry an unrecognized gain of 2,52,910 crores, which is not appearing as part of our net worth. It is not appearing as part of our profits, and is not appearing as part of our capital adequacy calculations. From a capital adequacy perspective, our total capital adequacy stands at 20.9%, of which Tier 1 capital stands at 19.9% and Tier 2 capital stands at 1%. So this is way above the regulatory requirement of the amount of capital which we are required to carry. Non-performing loans. Now I will give you non-performing loans in two ways. One is non-performing loans after taking into account the Supreme Court directive that no fresh non-performing loans are to be considered, and the other is on a pro forma basis of what the level of non-performing loans would be. So if we were to look at the number post the Supreme Court directive, then the total non-performing loan number stands at 1.67%. Individual non-performing loan stands at 79 basis points, and non-individual non-performing loans stand at 4%. If, however, we were to report the NPL numbers the way historically we used to report that, then the total non-performing loan would have been 1.91%, individual non-performing loan would be 98 basis points, and non-individual non-performing loan would have been 4.35%. The total, as you know, the Reserve Bank permitted a one-time restructuring of loans, and in the aggregate, the total amount of loans that have been restructured is marginally over 5,000 crores of rupees, which is 0.9% of our assets under management. Out of this 5,010 crores, 26% is for individual loans and 74% is for non-individual loans. And out of this little over 5,000 crore number, as much as 52% is in respect of just one account. If we were to look at the balance sheet provisioning, as of 31st of March or 31st of December, we were carrying a total provision of 12,342 crores. If, however, we were to make a provision strictly in accordance with what the NHB guidelines were, where NPLs are to be, you make a provision based on the period of default and you make a provision for standard assets, then the total provision we would have needed to carry would have been 6,579 crores, as against which we are carrying a provision of 12,342 crores. During this 9-month period, we have charged the profit and loss account with a sum of 2,229 crores towards provisioning, of which as much as 594 crores is in the third quarter of the financial year. For COVID, we still continue to carry a provision of 959 crores, and we will in due course over the next quarter or so review this provision and see how much of that we continue to need to carry. Net interest income for the quarter. Now, there are two ways, as I've always told you, to look at net interest income. One is on the basis of just simple interest, and the other is after taking into account the profit that is booked at the time of selling a loan. Now, under Ind AS accounting standards, when a loan is sold, the profit on that loan or the profit on sale of that loan has to be accounted for upfront. So, and it is reflected as part of the as a separate item in the P&L account. So if we were to calculate the net interest income purely on the basis of interest, without taking cognizance of the profit on sale of loans, then the net interest income for the quarter would have been 4,086 crores compared to 3,240 crores in the third quarter of last year, giving an increase of 26%. For a 9-month period, net interest income would have been 11,107 crores compared to 9,340 crores in the third quarter of last year, giving an increase of 19%. Now, part of the reason for the strong NII growth is because the huge amount of excess liquidity that we were carrying in the balance sheet, we have slowly started reducing. In the first quarter, we were carrying excess liquidity of as much as 32,000 crores. In the second quarter, it was about 24,800 crores. In the third quarter, the average works out just under 17,000 crores. In terms of sale of loans, during the quarter, as I mentioned earlier, we sold loans of 7,076 crores of rupees and booked an income of 410 crores of rupees. If we were to include this 410 crores of income as part of the net interest income, which is the way most analysts do, and of course, considering the securitization income even in the previous year, then the net interest income for the quarter would have been 4,468 crores compared to 3,428 crores in the third quarter of last year, giving an increase of 30%, 30. If you were to look at the 9-month period, the 9-month net interest income in that case would have been 11,840 crores compared to 10,063 crores last year, giving an increase of 18%. Net interest margin for the 9-month period stands at 3.4%. Last year at this time was 3.3%. Spread stands at 2.28% compared to 2.27% last year. Individual spread stands at 1.94%. Non-individual spread stands at 3.14%. The reported profit before tax for the quarter stands at 3,753 crores and for the 9-month period stands at 10,891 crores. Now, on the face of it, the profit before tax for the quarter and the 9-month period is lower than what it was in the previous year. But as all investors, all analysts are aware, the primary reason for that was that in the third quarter of last year, on merger of CRORE Finance, which was a subsidiary company with Bandhan Bank, we had to book a profit of more than 9,000 crores. So therefore, if we were to make a comparison on a like-to-like basis, we need to exclude certain items like profit on sale of investments, which could be there in one quarter, not there in another quarter, things like fair value of investments, sale of loans, and things like that. So if we do that, then the fair value gain on merger of CRORE for last year, which is 9,020 crores, we need to exclude from last year's income. And similarly, from the current year's income, we need to exclude the profit on sale of investments, which is 159 crores this year, compared to only 4 crores last year. Similarly, we will exclude the net gain on fair valuation of fair valuation of investments and income on securitized loans. That for the current year is 641 crores in this quarter. Last year's third quarter was 209 crores. Similarly, stock options we had granted to employees in the second quarter of this year. There is an accounting charge of 147 crores in the P&L account for this quarter, compared to only 3 crores last year. And last, of course, is the ECL provisioning, which in this quarter is lower than what it was last year. So if you adjust for all of that, the adjusted profit before tax stands at 3,694 crores of rupees compared to 2,908 crores in the third quarter of last year, giving an increase of 27%. Now, just as we did for the 3-month period, we need to make a similar adjustment for the 9-month period. And then if we do that, the adjusted profit before tax for the 9-month period stands at 10,050 crores compared to 8,287 crores in the 9 months of last year, giving an increase of 21%. Tax for the quarter stands at 827 crores of rupees compared to 771 crores in the third quarter of last year. 9 months tax figure stands at 2,044 crores compared to 2,121 crores in the previous year. So the reported profit after tax for this quarter stands at 2,926 crores, and the reported profit after tax for the 9-month period stands at 8,847 crores. Total comprehensive income for the quarter stands at 5,252 crores, and the 9-month period stands at 11,787 crores rupees. On a consolidated basis, our profit for the third quarter stands at 5,724 crores rupees, and for the 9-month period stands at 14,813 crores. The quarterly profit represents a 36% increase in consolidated profits over the third quarter of last year. So these are just a few highlights of the results for the quarter. The growth that we have seen in housing loans, the demand that we have seen in housing loans continues unabated even as we go beyond December.